All right, let's dive right in. For years, the whole conversation in the silver community has been about if the price is going to explode, right? Or when it's going to happen. But today, we're going to talk about something way more important, something almost nobody talks about. What's your plan for when you're actually proven right? Seriously, how do you survive the victory?
And that quote just nails it, doesn't it? Because that moment when silver goes absolutely parabolic, well, that's not the finish line. Nope. It's the starting gun for a whole new kind of battle, a much more dangerous one, where the prize is literally life-changing wealth.
So let's just be real for a second. You've been stacking for years, you've held on, you've weathered all the manipulation, all the dips. But have you really asked yourself what happens when you wake up one morning and the price is, I don't know, $100, $150, maybe even higher? Do you have a concrete plan, or are you just going to wing it? Because let me tell you, just reacting in the moment, that is a recipe for absolute disaster.
And that brings us right to our first, and maybe most important, point. The biggest threat to your newfound riches, it's not going to be some banker in a skyscraper or a politician in D.C. No way. It's going to be you.
Yeah, you heard me right. The most dangerous person in this whole equation isn't some Wall Street shark. It's the person looking back at you in the mirror. See, the second those numbers on your screen become truly life-altering, your logical, rational brain, it can just get completely hijacked. The source material calls it the lizard brain, and that part of you is wired for panic, for fight or flight, not for making calm, sound financial decisions.
Now, this next idea, this is fascinating. The source calls it vertigo. Think about it. It's this extreme panic, this overwhelming urge to just sell everything, and it's triggered by the very thing you've been waiting for. The numbers get huge, and instead of feeling calm, you feel this vertigo, this need to just cash out and make it real. It's a pure emotional reaction, and it's the enemy of a good strategy.
And that vertigo gets even worse because of another psychological trap, anchor bias. Look, for years, your brain has gotten used to silver being, well, cheap. You're mentally anchored to prices like $25, maybe $30 an ounce. So when it rips to 50 or 60 bucks, your brain just starts screaming, "Sell! It's a bubble! Get out!" Even if, fundamentally, the real move is just getting started.
Okay, so how do you break that mental anchor? Chew on this number for a second. If you take the 1980 high for silver and you adjust it for inflation, using the same way they calculated inflation back then, not the watered-down version we have today, you are not looking at 50 bucks. You're looking at a number somewhere between $600 and maybe even $800 an ounce. All of a sudden, $50 doesn't look like a peak, does it? It looks more like a launch pad.
Okay, so let's say you manage to fight off the panic, you don't sell too early, but then you make the next critical mistake. You sell for the wrong thing. You absolutely have to avoid what we call the fiat currency trap.
I mean, just look at the two side by side. On one side, you've got silver, a hard asset. It's scarce, it's strategic, it has real intrinsic value. And on the other side, you've got fiat dollars, a currency that can be printed into infinity. It's not really an asset, it's a liability of the central bank, and it's constantly losing purchasing power. Trading your silver for a pile of dollars during a currency crisis is like trading your lifeboat for a deck chair on the Titanic.
And this quote just drives it home perfectly. It's a brilliant metaphor because it shows just how nuts the idea is. Why in the world would you trade your actual salvation, your hard asset, for more tickets on a sinking ship, just because the band is still playing?
So if selling for dollars is a huge mistake, what do you do? This right here is the heart of the strategy. You don't sell, you swap. You execute what's called the ratio trade, and you move from silver to gold. Right now, the gold to silver ratio is somewhere around 80 to 1. Now, what does that mean? It means it takes about 80 ounces of silver to buy just 1 single ounce of gold. And historically, that is incredibly high. It's a huge signal that tells us silver is very, very cheap compared to gold. Okay, now this is where the magic really happens. Let's just run the numbers. Say you've got 1,000 ounces of silver. Right now, at an 80 to 1 ratio, you could trade that for 12.5 ounces of gold. Okay, not bad. But what if you wait? During a squeeze, silver almost always outperforms gold, and that ratio comes crashing down. So let's say you wait for it to hit 30 to 1, a very reasonable target. Suddenly, that same 1,000 ounces of silver now buys you over 33 ounces of gold. You see what just happened? You've almost tripled your gold holdings, and you didn't have to spend a single extra dime. So why would you do this? Well, it's simple. You're basically trading a super volatile, speculative asset, what some call the devil's metal, right at its peak for a much more stable, respected store of value, God's money. You lock in those incredible gains, you're now on the same side as the central banks who are all stacking gold, and frankly, it's a heck of a lot easier to store and transport. But look, even owning a pile of gold isn't the final destination. That's not the end game. The real end game is using that preserved wealth to buy assets that actually produce income. Cash-flowing, productive assets. And this requires patience. The source calls it the bridge strategy. It's a multi-step process. Step 1, you ride the silver squeeze for all it's worth. Step 2, you swap that silver for gold to lock in your gains and stabilize your wealth. Step 3, and this is the hard part, you wait. You wait for the inevitable crash in other overinflated markets like real estate. And then step 4, you use your gold to buy productive land or property at a massive discount. This right here is a crucial mind shift. You have to start thinking like the truly wealthy do. Stop pricing things in dollars. Start pricing them in ounces of gold or silver. A house, for example, might only drop 25% in its dollar price, which seems okay. But if the price of your silver has gone up 10 or 20 times, that same house is now 80 or 90% cheaper when you price it in silver. That is the real sale. And this brings us right back to the why. Why are we even doing this? Remember, the ultimate goal isn't to just sit on a pile of metal like a dragon. Silver and gold are your insurance policy. They're the vehicle you use to transfer your wealth through a crisis. But real freedom, the kind of freedom that lasts for generations, that comes from assets that pay you to own them. Think farmland, rental properties, businesses that actually generate an income stream.
Okay, so this is the final piece of the puzzle, and it might be the hardest. How in the world do you know when it's time to pull the trigger? Look, timing the exact top is a fool's game, it's impossible. But spotting the signs of a full-blown mania phase, that is absolutely doable. So here's your checklist. These are the signals that the top is near. When the mainstream media, the same people who told you silver was a pet rock, are suddenly screaming, "Buy silver now," that's a huge red flag. When your barber, your taxi driver, your cousin who knows nothing about finance starts giving you hot tips on silver, that's a red flag. When you look at the price chart and it just goes vertical, straight up, that's a classic blow-off top. These are all signs that the smart money is quietly heading for the exits.
And this really is the key to executing the plan. You cannot get greedy. It's a classic saying for a reason. He who sells early sells best. Just leave the last 10% for the next guy. Think about it. If you sell at 90 bucks an ounce and it runs to 100, who cares? You won. You made a fortune. But if you get greedy and hold out for 110 and it crashes back down to 50, you lost. You just lost big. Leave that last little bit on the table. It's not worth the risk.
It all boils down to this simple idea of regret minimization. Just look at the slide and ask yourself, honestly, which of these two outcomes would you regret more? A, selling a little early and missing that final 10% pop, or B, not selling at all and watching your life-changing wealth get cut in half. Scenario A is a minor annoyance. You're still rich. Scenario B, that's a catastrophe. Your entire exit strategy needs to be built around avoiding scenario B at all costs.
So let's bring this all home. The plan is actually simple, but it's not going to be easy. You have to have the discipline to follow it. First, you've got to master your own psychology. Beat the vertigo. Break the anchor bias. Second, you absolutely cannot fall into the trap of selling your real money for failing paper currency. And third, you use the gold to silver ratio as your guide to swap your crazy silver gains into stable, boring gold. That's the playbook. And that brings us to the single most important thing you can do right now. Make a contract with yourself. Literally write it down. I will swap X% of my silver for gold when the ratio hits Y. Do it today while you're calm and rational. Because the person you're going to be in the middle of that market mania, trust me, that person is emotional, panicky, and completely unreliable.
And so, let's end with this one thought. You didn't get into this to get more dollars, did you? This whole journey, it wasn't about getting a high score in some financial video game. You stacked silver for a reason. You stacked it for freedom. So the final and most important question you need to answer is, what does that freedom actually look like for you and for your family?